October 19, 1987. A day forever etched in financial history. Black Monday. It started subtly, a tremor in the global markets. Hong Kong's Hang Seng Index took a dip, then a plunge. The contagion spread rapidly westward. European markets, still reeling from the initial shock, tumbled further. Then came the opening bell in New York. The Dow Jones Industrial Average, the supposed bedrock of American capitalism, plummeted. 22.6%. Gone in a single trading session. Panic gripped investors as billions evaporated into thin air. The fear was palpable, the uncertainty overwhelming. Black Monday wasn't a bolt from the blue, it was the culmination of several economic factors brewing for months. Program trading, a relatively new phenomenon then, played a significant role. Computer algorithms, designed to sell automatically when certain thresholds were met, kicked into overdrive, exacerbating the downturn. The US economy, already grappling with a ballooning trade deficit, was particularly vulnerable. Interest rates were on the rise globally, making borrowing more expensive and putting a damper on economic growth. Market valuations had reached dizzying heights, with price-to-earnings ratios soaring beyond historical norms. The stage was set for a correction, a reckoning, and when it arrived it was swift and brutal. The impact of Black Monday reverberated far beyond Wall Street. It was a global financial earthquake. Stock markets around the world, from Tokyo to London, experienced their own versions of the crash. Businesses, large and small, felt the pinch as investments dried up and consumer confidence evaporated. The psychological toll was immense. The crash shattered the illusion of invincibility that had pervaded the markets. It exposed the fragility of a system built on confidence and interconnectedness. The fear of a global recession loomed large. Governments and financial institutions scrambled to contain the damage, but the scars of Black Monday ran deep. Picking up the pieces: recovery and the Fed's response. In the immediate aftermath of the crash, chaos reigned. The global financial system teetered on the brink. Then, the US Federal Reserve, under the leadership of Alan Greenspan, stepped in. They slashed interest rates and pumped liquidity into the markets, effectively acting as the lender of last resort. These decisive actions, while controversial, helped to stabilize the system and prevent a complete meltdown. Slowly, tentatively, the markets began to recover. Confidence, though shaken, gradually returned. The global economy, while bruised and battered, avoided a full-blown recession. The road to recovery was long and arduous, but it proved that even in the face of unprecedented turmoil, resilience and decisive action can avert disaster. Black Monday's legacy: regulatory changes and lasting impacts. Black Monday served as a wake-up call for regulators and policymakers worldwide. It exposed the vulnerabilities of a global financial system increasingly reliant on technology and complex financial instruments. In the years that followed, a wave of regulatory reform swept across the globe. Circuit breakers were introduced in stock markets to halt trading during periods of extreme volatility, preventing a repeat of the freefall witnessed on Black Monday. New regulations aimed at curbing excessive speculation and leverage were implemented. Transparency and oversight of financial institutions were enhanced. Black Monday's legacy extends beyond specific regulations. It fundamentally changed the way we think about risk, volatility, and the interconnectedness of the global financial system. Echoes of Black Monday. Lessons for today's markets. 37 years after Black Monday, its echoes can still be felt. The lessons learned from that tumultuous day remain as relevant as ever. The importance of sound risk management, the need for robust regulatory frameworks, and the dangers of excessive speculation continue to guide financial markets today. While technology and the global financial landscape have evolved significantly since 1987, the fundamental drivers of market behavior remain largely the same. Fear and greed, herd mentality, and the tendency towards irrational exuberance can still lead to market bubbles and subsequent crashes. Black Monday serves as a stark reminder that financial markets are not immune to crises. It underscores the importance of vigilance, preparedness, and a healthy dose of skepticism in navigating the complexities of the global financial system.